Mantle started as one of crypto's biggest DAOs with a multi-billion-dollar treasury. Then it reinvented itself as an Ethereum Layer 2. Today, it's the largest ZK rollup in the world, with over $1 billion in TVL, while the token is still 75% below its all-time high. In this video, we break down the tokenomics, the risks, and how many tokens you'd need to retire as a millionaire. And before we start, if you're not subscribed yet, fix that now. Hit subscribe, turn on the bell, and let's get into it. Mantle didn't start as Mantle, they started as BitDAO, one of the largest DAOs ever created, sitting on a multi-billion-dollar treasury and a mission to fund decentralized finance at scale. In 2023, the community voted to revolve. BitDAO became Mantle, tokens converted one-to-one, and the focus sharpened. Built a world-class Ethereum Layer 2, had become the institutional gateway between traditional finance and on-chain liquidity. What makes Mantle's origin unusual is that there's no single founder. Early key contributors like Jacob C.eth and Ben Zhao helped launch the initial proposal, but governance sits with the MNT token holders. The community voted to burn 3 billion tokens in 2023, cutting fully diluted supply from 9.2 billion down to 6.2 billion. That increased scarcity and investor confidence in one move. Here's where the numbers get interesting. MNT has a maximum supply of around 6.2 billion tokens, with approximately 3.3 billion currently circulating. That's roughly 51% in circulation and 49% sitting in the Mantle treasury. That treasury is actively deployed, currently holding over $2.7 billion in diversified assets, including MNT, Beef, Bitcoin, and stablecoins, the largest community-owned treasury in crypto. There were no VC click-on-looks or early investor dumps here. The token evolved from a DAO treasury, which changes the narrative entirely, and unlike most L2 tokens that rely on VC firms to drive demand, MNT has Bybit, one of the world's top 3 exchanges. Through Bybit's institutional onboarding of MNT, clients can access improved leverage, expanded loan terms, and trading features across its platform. The risk on the supply side? The treasury still controls a big chunk of tokens, and future governance decisions could release capital in ways that create sell pressure. Worth watching, but so far, the track record has been disciplined. Before the TVL explosion, there was September 2025, because that's when the foundation for everything that followed was laid. The largest ZK rollup in the world, or the L2s make you wait 7 days. That gap matters to institutions, that gap matters to anyone moving real money. Total value locked on Mantle reached a new all-time high on March the 9th, crossing the $1 billion mark for the first time at $1.06 billion, according to DeFi Llama. The surge followed the launch of Aave, the largest lending protocol in decentralized finance, on Mantle in mid-February. As of today, Aave on Mantle has surpassed $1.2 billion in total lending and borrowing market size. Aave's own founder summed it up in 2 words: Aave effect. That's the signal. Mantle now sits 12th among all chains by TVL on DeFi Llama, just behind Polygon at approximately $1.15 billion and ahead of Avalanche at roughly $800 million. Mantle's DeFi TVL milestone positions it among the fastest growing L2 networks and the premier distribution layer by capital inflows in 2026, a trajectory driven by strong ecosystem partnerships, native yield products, and an active incentive program. Crossing $1 billion in total market size in under 3 weeks is a clear signal, not just of what Mantle and Aave have built together, but of where institutional and retail DeFi is heading. No moonshot comes without risk, and Mantle has some real ones worth naming. The Bybit relationship is Mantle's biggest distribution advantage, and its biggest single point of failure. In 2024 alone, Bybit was forced to exit France after being blacklisted by the AMF, warned by Hong Kong regulators, and had already left the UK and Canada the year before. Bybit currently cannot operate in the US, UK, Canada, China, France, or Singapore. That's a lot of the world's biggest capital markets locked out. One more regulatory move in a key jurisdiction, and Mantle's institutional pipeline gets complicated fast. Let's get to the numbers you actually care about. Mantle is currently trading around 65 to 70 cents, with a market cap around $2.2 billion. Its all-time high was $2.85, reached in October 2025, and is now sitting more than 75% below that peak. That all-time high was hit right as the ZK rollup upgrade launched and ecosystem momentum was peaking. The current pullback puts MNT squarely in deep accumulation territory relative to its own history. We'll run 3 scenarios using a reference price at 67 cents and a circulating supply at about 3.3 billion MNT. Bear case is price to look back to prior halls hand high at $2.85. That's roughly a 4.3 times from here. To reach $1 million at $2.86, you'd need approximately 350,000 MNT. At today's price, that's an upfront cost of around $234,500. This scenario requires significant capital, but it's literally just asking Mantle to revisit a price it already traded at 6 months ago. Base case is $8, reflecting a full cycle expansion. As DeFi TVL grows, real-world asset tokenization scales, and the Bybit distribution engine matures. $8 represents a roughly 4 times expansion beyond the prior ATH, implying a fully diluted market cap of around $50 billion. From 67 cents, that's an 11.9 times. To hit $1 million, you need around 125,000 MNT, costing you approximately $83,750 to date. Under 6 figures for a shot at 7. And the bull case is $20, the institutional settlement layer narrative fully priced in. If Mantle genuinely becomes the on-chain rail for real-world asset flows, tokenized equities, stablecoins, institutional lending. At $20 price implies a fully diluted market cap of roughly $124 billion. That's aggressive. But the RWA tokenization market alone is projected to reach trillions this decade. From 67 cents, that's a 29.8 times. You'd need just 50,000 MNT to target $1 million, costing you around $33,500 today. For context, Aave alone has a market cap around $1.5 billion, and it just deployed on Mantle. BlackRock's BUIGL fund is tokenized. Ondo and Ethena are already live in the ecosystem. If Mantle catches even a modest slice at what flows through these rails, $20 becomes less than a fantasy and more a math problem. So, is Mantle a quiet institutional L2 that catches everyone off guard when the next cycle hits? Or is the treasury concentration and Bybit dependency too much single point of failure risk to justify that? That's the call only you can make. Drop your Mantle price tag in the comments. I want your bear, your base, and your bull. If this breakdown gives you something to think about, hit like, subscribe, and share it to someone who's still sleeping on the way to narrative. Being momentum might just be getting started.